Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello oil friends, checking in on oil and USO. So oil on the hourly time frame, we had an all-out dump this morning. The RSI got very low, down just about 20, and seeing the RSI that low on the hourly time frame, first thing I do is I zoom out and say, okay, what happens when the RSI reaches this level in the past? And I could see, wow, we have the lowest RSI that we have seen since back on January 9th. So this is 6 weeks, the lowest RSI we have seen. So I'm going to be looking for a bounce. And we did get a bounce. We had a little bit of a lower wick with bulls buying the dip. Then we had our bullish reversal candlestick, which was an inside candlestick with the range fitting completely within the range of the previous candlestick. As soon as we saw a break of 53.33, that was a bullish signal that this candlestick was likely to see continuation. And of course, it saw a huge continuation. 2 green candlesticks taking back 5 red candlesticks of downside action. And of course, we rejected from $54. That was certainly to be expected. I was looking to lock in profit just below that $54 level because of how clear that resistance level has been in the past. And when you're hitting that level with overextended short-term RSI levels indicating overbought conditions, look at the 5-minute time frame. The RSI was up in the low 80s when we were up at this resistance. So we're definitely looking for a rejection from that level, which is how it played out. But on the hourly time frame, the bulls are holding up just fine. And this could even potentially be a bull flag of consolidation, just drawing it really roughly here. But parallel support and resistance after a big time move to the upside. And we'll be looking for potential continuation, and it's going to be a battle for $54 as it continues, as it has been for a very long time. So again, oil on the daily time frame has gone green, red, green, red, green, red. Now another red. Actually, that's just starting today right now. So we have a lot of time playing out in this current candlestick. But we see the long lower wick of bulls buying the dip, and we look at the weekly time frame and we're seeing the same thing. A lower wick with bulls buying the dip and more battle at $54 psychological. Bulls are trying to close over that level on the weekly time frame for the first time in a year and a half, and we're going to have to see how the reaction to the inventory report goes tomorrow. I'm looking at resistance of 54.20 and 54.59 with support at 53.80 and 53.65. So bulls in control of the short term, hourly chart still favoring them. USO, so we have this clear sideways channel where we have support in the low 1130s and resistance in the low to mid 1160s. So here we are bouncing off 1128 and closing at the high of the day, and we're pretty much right smack dab in the middle of that channel as we're heading into inventory report day tomorrow. So these Bollinger Bands, they're either going to have to begin expanding or we're going to wait until we close above or below them for a breakout or a breakdown. And right now, again, I'm still favoring a breakout. I am still bullish on oil and watching very closely for 55.21 resistance to be broken and for us to hit the highest price we've seen in a very long time. So the bulls have momentum heading into tomorrow after 1146. I'm looking at 1156 and 1165, and the weekly time frame still seeing these lower wicks sideways trading, lack of action but still holding key support, keeping the bulls in control because we are coming off of higher lows and higher highs, and not really on USO. We do have a lower high here, $12.45 and $12. So over the past 6+ months, we've seen higher lows and higher highs, but we do have that resistance from back in June, and we don't have that on oil. If we look on the daily time frame for oil, back in June, we were certainly lower, and the price was down under $52, and here we are up at 54. So oil has been in a really nice higher low, higher high pattern over that time frame, and we're just looking for USO to make a bullish break and see some continuation over 1165 resistance. So again, tomorrow the inventory report, we'll see if the bulls can get some momentum over $54. And again, this daily chart, we could pull all the way back down to $53, $52.50, and still be maintaining an uptrend line. And really the only big red flag would require a break of 51.25. Then I would be sounding the alarm for the bulls on the daily time frame. But we still have, about $2.75 before we would see that happen. So we're going to keep a close eye on things, and we'll check back in tomorrow. Thanks for watching.